good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Today, the color for Navaratri is green, but markets really don't want to follow that at all. Look at the fall that's coming for the Nifty. Furthermore, decline. Now it's below 24,700, 24,660 is what the Nifty is trading at the day's lowest point as of now. Now, we had few sectors that were managing to hold on to some green. That was the auto pack, but that has also moved into the red. And now all the sectors today, as of now, are trading in the red, with sharper cuts seen for the Nifty Pharma as well as the Nifty IT. Looking at the broader end of the market, underperformance coming in there as well. So Nifty mid-cap as well as the small cap, clear pressure today seen for both these indices as well. Nifty mid-cap down 1.7%. Nifty small-cap also is trading with cuts of almost 2% in today's trading session, more than 2%. So that is what we'll be keeping an eye out on. As of now, the markets are trading at the day's lowest point. Keep an eye out on those losers that are coming in for the Nifty 50 as well. So yes, we have M&M, IndusInd Bank, Eternal, Sun Pharma, all these among the top losers for the Nifty 50. But that's why the market setup is looking like as of now. But this is a show where we solve all your stock-related queries, and we're going to be doing just that with our experts for today. We have Shahina Mukadam as well as Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan. Somil as well as Shahina, good afternoon. Thank you so much for joining us. Somil, I just want a quick word first in terms of the markets, because now again we are around the 24,600 level. What are the key levels we're keeping an eye out on today in terms of the Nifty at close, and what will it mean for us going forward then? If it closes around 24,600, what is the indication then?
Good afternoon, Vinny. Good afternoon to everyone. Markets are sliding below 20 and 40 daily moving average. It is now getting very close to 200 daily exponential moving average. The trend is down, low top, low bottom formation. A lot of sectors like IT, pharma, real estate are looking negative. Even the autos, which were doing good, metals were doing good, and in fact, even the reality was doing good. So these stocks have started, profit booking. Some selling pressure has started coming up. So everything has come up together, and the selling pressure is intensifying now. So I think the next level to watch out is 24,400, which is very close to 200 daily exponential moving average, and that should be the target in the very short term. So the view is negative in the short term. In fact, if the market closes below 200 daily moving average, then the medium term also becomes negative. So be very cautious from here on.
Okay, be cautious from here on. That's the view coming in there on the markets right now. But let's move on and get started with those stock-related queries for today then. The first query for today is coming from Padma. She's writing to us from Andhra Pradesh, holding 200 shares of Granules. The price is 100 rupees as what she's bought it at. Now, she wants to know the future prospects of the stock. Shahina, good afternoon. Granules, from the level that she's bought it at, she's making good amount of profit. But given the concerns that we're seeing coming in, whether United States front or even in terms of their plant issues that were going on, what is the view now on Granules, and should they book out their profit?
Yeah, so Vinny, I would say that she needs to take at least 50% of the table. She's making decent amount of money. As you mentioned, their plant, Hyderabad plant, has got one US FDA warning. Also, in terms of, if you look at their profits, if you look at their turnover, look at it over a three-year period, it has stagnated. It's been almost flat. And the reason being that while they are, they are world leaders in their segments of operation like paracetamol and metformin, but these are older molecules. So the growth of here is limited. Now, added to all this is the uncertainty with regard to, import duties by US. Of course, as of now, it doesn't attract, but there is that possibility that overhangs sword. So while valuations are not very expensive, if you compare their turnover to the market cap, it's just about 2.5 times. So in pharma API terms, it's not that expensive. At the same time, given all the other factors, I would say take half the money off the table.
Okay, take half the money off the table, can hold the remaining half. Somil, what's your view for Granules on the charts and technicals? Would you say they should book out all their profit, half the profit, or continue to just hold it?
I think granules have taken resistance around 550, 555 levels for the third time in the last 1 year, which is a very negative sign for the stock. Now, granules has also started making low top, low bottom formation, trading below 20 daily moving average. I think the stop loss for a long position would be 505. If the stock closes below 505, exit would be my call. And then the next level on the downside would be anywhere between 430 and 440. So, yes, the stop loss for a long position should be 505.
Okay, keep an eye out on those stop loss levels over there as well. Next query for today is coming from Adi Narayan, who's writing to us from New Delhi. He's holding 10 shares of Dixon Technologies. Price is 4,200 rupees per share. The other one is 100 shares of Bajaj Finance at 630 rupees per share. So wants to know the target price to exit for both these stocks, and on the fundamentals, does it merit holding both of them still? Shahina, your view on Dixon Tech as well as Bajaj Finance?
For Dixon Tech, I would say even current price is a good price to book at least half your profits. He's making good money in both. He can, in my view, continue to hold Bajaj Finance with a stop loss, but you can hold the full quantity in my view. Dixon, see, basically, if you see, the numbers are very strong. In Q1, they grew their profits, they doubled their profits. Turnover growth also was very good, more than 100 times, 125%. So they're doing very well in their mobile vertical. These factors will continue on into the current year. But even if it does, even if profits double, if you look at pure valuations, look at 1 year forward, FY27, doubling of profits still EV by EBITDA is 35 times. So if you're a holder for 1 year, 2 years, in my view, the stock is very expensive. Take half the money off the table. Now, as far as Bajaj Finance goes, I believe their valuations at about adjusted valuations of 4 times price to book, in my view, is not expensive. Q1 was a bit of a dampener, a little bit underperformance in terms of their overall growth, also in AUMs compared to what they have done in the past. Also, their net NPA was slightly higher compared to the previous year. Having said that, I think valuation still at about 4 times adjusted price to book, not too expensive for Bajaj Finance, given that I think the growth in the second half will be much better. So ex bonus price, it's doing pretty well. You could continue to hold. If you want to do some tax planning, yeah, you can always sell the original quantity, a bit of it, but otherwise continue to hold.
Okay, continue to hold Bajaj Finance, can book some half bit of a profit for Dixon Tech. That's the word on the fundamentals. On the technicals, Somil, they want some exit price that you can look at for both these stocks as well.
I think if you want an exit price and you've already made money on this, exit price would be now. Okay. Because for Dixon in the medium term outlook, I think it is going towards 16,500 and probably around 200 daily moving average, which is around 15,600, 700 levels. So you probably would get better prices to buy, and if you're looking for an exit price, this is the right time to go ahead and book some profits in Dixon. Now, Bajaj Finance, I'm very positive in the medium term, long term, but there is no doubt that this stock will also be correcting a little bit till the 40 daily moving average, which is around 550. So if you're looking to book out some profit or you're looking for an exit price, right now is the time, and you can buy at lower levels around 950, 930 levels.
Okay, keeping an eye out on those levels over there for Bajaj Finance as well as Dixon Technologies, and mentioned when you can exit as well. Let's move on to the next query then for today. We have Ganesh Pai, who's writing to us from Kochi. He's holding 510 shares of ICICI Prudential Life Insurance. This is at a price of 678 rupees per share. They're making a loss on this one. Now, he's asking if he can continue to hold this for 1 more year and wants to know if it's actually worth holding or should he just get out at the current levels. Shahina, your view for ICICI Prudential Life, is this one of those bets you can continue to hold or maybe move to some other life insurance company or overall on another sector?
See, it's not a bad stock to hold for the long term. Having said that, I think at least half of the quantity he can book his loss and sort of exit ICICI Pru at least half the quantity. See, if you look at valuations, price to embedded value, is around 2 times currently, which in my view is a bit expensive given the fact that their overall growth in revenues is a bit impacted because of the changes that happened last year in terms of the ULIP taxation. While GST, now having been removed for life and health insurance policies, so it's a very good positive for growth, and I think second half will do well in terms of overall growth. At least it will compensate whatever the decline had been for the ULIPs. Profits also is growing well. So overall, there is nothing wrong with the stock. At the same time, I would say that you can take 50% off the table because of valuations.
Okay. Can book 50% of the value of your current holding in terms of concerns for valuation, but otherwise a good stock to hold for the long term. Somil, your view for ICICI Prudential Life, should the viewer continue to hold this because they're holding it at a bit of a higher level from their buy price?
I think it has just started making low tops, low bottom, trading below 2040 daily moving average, trading below 200 daily moving average from last couple of months already. So it is in a downtrend already in last couple of months. So negative view in the short term, medium term, both. I'll be expecting the stock to go down till at least 560, 550 levels. So you'll get better prices from these levels to buy onto the stock. But overall, if you see the long-term charts trend still remains positive. So buy on decline should be the strategy. But at this point of time, it is definitely heading towards 560, 550 levels.
Okay, keeping an eye out on those levels over there for ICICI Pru. But on that note, we're actually going to slip into a very short break, but a programming note coming in for you all, for our viewers. If you are looking for the big bets on market themes that will shape India 2013, Nilesh Shah of Kotak AMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have gained up and signed up. Become a member today on CNBC TV18 app or log on to cnbctv18.com access plans. Welcome back to Your Stocks on CNBC TV18. We still have with us Shahina Mukadam as well as Somil Mehta to solve all the stock-related queries. Let's keep it going with the next query then for today is from PS Raju, who's writing to us from Visakhapatnam. He's holding 10 shares of Hitachi Energy. This is at a price of 19,229 rupees per share. Currently making some bit of a profit here, but wants to know the future prospects of the company and the medium-term outlook. Shahina, Hitachi Energy, what is your view coming in for this cap good company? Is it a good bet? Should they continue to hold it for the medium term?
I'm not sure of the medium term because valuations are pretty expensive. But having said that, I would say, it's a good hold for the longer term because in the short term, medium term, it's more like a turnaround stock. So I wouldn't really look at numbers, but I would look at their order book, which is very strong. They've got order book of around 9,000 crores, and they have got a tie-up with they've got some tie-up to sell HVDC plant for in Australia, which I think is going to get them a good amount of revenues and profits because they will be supplying the equipment from their India plant. And if you look at the growth also in terms of their quarter numbers were very strong, and I expect it to continue. Turnover is doubling, profits are turnover is going about 27-28%, but profits are more than doubling. So I think numbers also over a period of time will catch up. So I would say continue to hold. Parent is very strong, and hold it for the longer term.
Okay, can hold it for the longer term there. And on the technicals, what's the view for Hitachi Energy, Somil?
Absolutely positive. Agree to the view. Hold on to the stock. The support level would be around 18,350. That would be first support. The next support on the downside is 16,760. So these are the two levels I'm watching out for. I'm looking for this stock to continue the uptrend. Medium term uptrend, long term uptrend is intact, and I think the next level to watch out would be around 21,600 levels as target.
Okay, keeping an eye out on those levels over there. We just had some flashes that came in for Raymond Lifestyle right now. So Raymond Lifestyle, they've given some notification that yesterday certain officials of the Income Tax Department had visited the company's offices as manufacturing units in India and that conducted a survey. But as of now, the stock is trading at the day's lowest point. Keep an eye out on that. It was just a survey that was conducted right now is what the information is coming on the exchanges. Let's move on then to the next query. We have next query coming from Aniket Parekh, who's writing to us from New Delhi. He's holding 600 shares around of BLS International. The average price, buying price, is 351 rupees per share. Wants to know the long-term view on the stock. Shahina, what's your view for BLS International?
I would say if you're holding it for the long term, continue to hold. It's a small cap with market cap of about 13,000 crores, and the stock has corrected. But I would say the business prospects remain strong. They have recently also tied up with UAE, and they've got number of other tie-ups with various countries for the consular services and visa services, which include, most of them like China, 70 plus countries. And China could be a good growth going forward from here. Some of the Middle East countries, African countries show good growth going forward from here. So I would say you continue to hold. In the shorter term, you could see some bit of consolidation because it's not very cheap or anything of that sort, but it's reasonably valued. So if you're holding it for the long term, I would say continue to hold.
Okay, holding it for the long term, continue to hold. That's a view on the fundamentals. On the technicals, Somil.
BLS looks negative to me. Trading below the averages, trading below 200 daily moving average. It's been in the downtrend for a little while now. Struggling to go above the averages, which is a negative sign for the stock. The next target on the downside, which I'm aiming, is around 310. And if it does not sustain around those levels, then the next level on the downside is 260. So my suggestion would be to exit this stock. In the medium term, in the short term, even in the long term, it looks a little negative now.
Okay, a bit negative on the technical front for BLS International. So keep an eye out on those levels over there as well. But next query for today is coming from Shashank, who's writing to us from Hyderabad. He's holding 200 shares of IDFC First Bank. Price is 40 rupees per share, making a profit. Asking if you should remain invested in this one. Shahina?
Yeah, I think you should remain invested. Valuations are not expensive. It's about 1.3 times price to book. And here, I believe that second half will be better. They have raised some funds recently on convertible preference issue. And I would say that in terms of both growth as well as valuation, it looks decent as of now at current levels. So you could continue to hold.
Continue to hold is the word on the fundamentals for IDFC First Bank. Technical levels for IDFC First Bank. Should the viewer remain invested or book out his profits?
I think if it is for medium term trade or a positional trade, then definitely book out some profits because it is already in the downtrend, in the medium term outlook, in the short term as well, making low top, low bottom below 20-40 daily moving average. And I think the next level on the downside would be 63, 62 level. So almost around 10%, cut from these levels. So anyone who is positionally on this stock should definitely book out some profits.
Okay, book out some profits for IDFC First Bank on the technical front. That's the view. But that was the last query for today. Shahina as well as Somil, thank you so much for joining us as always and helping our viewers solve those doubts. And have a great weekend. And viewers, thank you so much for tuning in. But a quick check in terms of the market right now. It's almost at the day's lowest point. It is at the day's lowest point. 24,640. Around that mark is what the Nifty is trading at. Keep an eye out on that. Pressure continues to be on the broader end of the market as well. But with that, it's a goodbye from me as well as the team who put this show together. Thank you so much for tuning in. Up next, you have Closing Bell to take you to the last hour of trade.